Hello and welcome. As we head into the weekend, the U.S. markets are now closed. The session on Friday, November 7th, 2025, was an absolute roller coaster for Datavault AI, trading under the ticker DVLT. The stock finished the regular session at 1.69 per share, which was a staggering 24.26% gain for the day. In after-hours trading, it tacked on another 4 cents, or 2.37%, to settle around 1.73. Now, if you just glanced at that 24% gain, you would think this was a straightforward, explosive breakout. The expectation is that some massive, company-altering news must have dropped, sending it parabolic. But the reality is far more complex and, frankly, more interesting. That 24% spike was actually a recovery from a brutal 2-day sell-off. Just the day before, on Thursday, the stock had plummeted over 11%. The day before that, it was down over 10%. So what we witnessed on Friday wasn't just a simple rally. It was a violent reversal, a sign of an intense battle playing out in a very low-priced stock. The common belief is that Datavault AI is a high-growth AI stock, but the disconnect between that label and its actual current financial performance is at the heart of this volatility. The market is trying to price in a flurry of activity, and Friday's buying pressure seems directly tied to a major announcement from November 4th. The company announced a $10 million worldwide exclusive license agreement with Silex Holding Company. This isn't just a simple software deal. Datavault is being tapped to tokenize and monetize real-world assets, specifically in the biotech space. We're talking about genomic and DNA data, diagnostic information, and therapeutics. This agreement also includes potential sales milestone payments of up to an incredible $2.55 billion. This is the kind of narrative that gets investors excited. The idea of tokenizing real-world assets, or RWAs, is one of the biggest themes in the blockchain and data space. The expectation is that this deal validates Datavault's entire business model. But this news was just one piece of a rapid-fire news cycle. The day before that, November 3rd, Datavault announced a partnership with Music Dash and NFHS to use its technology to track music data. On the same day, it also announced a November 14th record date for a Dream Bold Draft meme coin distribution to all eligible Datavault and Silex shareholders. This, in particular, is a very direct signal to the retail trading community. Announcing a meme coin distribution is a modern-day tactic to attract speculative interest and build a community, and it's certainly contributing to the chatter we're seeing online. Then on November 6th, it followed up with another press release about partnering with Rodney's Comedy Club for, of all things, live joke copywriting using its AI. So you have this cascade of news, a massive high-potential biotech deal, a music industry partnership, a meme coin airdrop, and a quirky AI application. It's a lot to digest. The market seems to be swinging wildly between optimism about these future-facing announcements and the stark reality of the company's current financials. The last earnings report for the second quarter, filed back in August, was not pretty. The company reported revenue of only $1.74 million and a significant net loss. The earnings per share was a miss of negative 0.54, far worse than the negative 0.14 analysts had been forecasting. The company is burning cash, and its profit margins are deeply negative. This is the central conflict for DVLT. You have a story stock with a narrative about tokenizing trillions of dollars in assets, but its current balance sheet is that of a struggling microcap. This is where things get really intense, and it brings us to the topic of short selling. Datavault AI is, without question, on the radar of short sellers. In fact, the company itself announced on October 31st that it was issuing a formal response to what it called a malicious short report from Wolfpack Research. This is a significant event. When a company has to publicly defend itself against a short seller's claims, it draws a clear line in the sand. On one side, you have the bears, represented by Wolfpack, who are likely pointing to the massive cash burn, the history of losses, and the speculative nature of the press releases. They are betting that the company will fail to execute and that the stock's value will decline. On the other side, you have the company and its bull case investors, who believe the technology is real and that these new deals, especially the Silex one, are the turning point. Let's look at the actual short-selling data, because this is where investors need to be careful. The most recently reported short interest as a percentage of the float is around 7.27%. That's a notable figure, but it's not the kind of astronomically high number, say 30 or 40%, that you'd typically associate with an imminent, massive squeeze. What's more telling is the days to cover, which is extremely low, sitting at just 0.14. Because DVLT trades with such high volume, tens of millions of shares per day, it means that short sellers can buy back their borrowed shares to close their positions in well under a single trading day. This makes a sustained multi-day squeeze very difficult to achieve, as the shorts aren't trapped. However, there is a piece of data that is likely fueling a lot of the retail speculation, and that is the fails to deliver, or FTD report. Looking back at late September, there were days with massive FTDs. On September 29th, for instance, nearly 12.8 million shares failed to be delivered. On September 30th, another 5.6 million. These are enormous numbers for a stock of this size. For retail investors active on forums like Reddit, FTDs are often seen as a sign of potential naked short selling or other settlement irregularities. While the data is from over a month ago, it builds a lasting narrative of manipulation that gets traders fired up when the price starts to move. For any investor looking at DVLT, it's important to know how to interpret this. You can find short interest data updated twice a month on Nasdaq's website. You can use services like Fintel or Ortex to track the live borrow fee rate, which tells you how expensive it is to borrow shares to short. As of early November, that rate was around 11.5%, elevated, which shows demand, but not at a panic level of 100% or more. Recognizing a coordinated short attack versus simple fundamentals-based shorting is difficult. An attack often involves a public report, like the Wolfpack one, combined with heavy short volume to create fear. The company's response is the countermove. What's your take on this? Do you think the Wolfpack research report was a legitimate warning about the company's fundamentals, or was it a tactical move to drive the price down? Comment below. I'm curious to see what the sentiment is. The company itself is a bit of a hybrid. It's not just one thing. It has its data science division, which is the sexy part of the business. This is where the AI, the blockchain technology, the real-world asset tokenization, and the information data exchange platform live. This is what the Silex deal is all about. But then it has its acoustic science division, which is its legacy WeSub business. This division focuses on wireless high-definition audio transmission technology. While it's a valid tech business, it's not what's driving the speculative fervor. The market is treating DVLT as a pure play on AI and tokenization, and the audio division is almost an afterthought for most traders. This is reflected in the ownership structure. Institutional ownership is very low, under 5%. We see names like Vanguard and BlackRock on the list, but their positions are tiny, likely just part of broad market index funds. This is not a stock that big money managers are piling into. Insider ownership, however, is quite high, around 28%, which means management has a lot of skin in the game. But we have also seen some insider selling in recent months, which sends a mixed message. The vast majority of the trading volume and online discussion is coming from the retail crowd. The r/penny stocks forums are active, with discussion about DVLT, with some traders claiming they will hodl until 2 digits, and others warning that it's all hype with no fundamental backing. The meme coin distribution is a clear nod to this powerful and volatile shareholder base. So where does this leave us for the future? Everything hinges on the next catalyst, and we have a big one coming up. The company is expected to report their third quarter earnings on or around November 14th. This will be the moment of truth. The expectation set by the company is for $12 to $15 million in revenue in the second half of 2025. The reality will be in the numbers they print. Can they show a clear line from all these press releases to actual incoming revenue? Will they provide more concrete details on the Silex deal and when those milestone payments might even begin to be a possibility? The bull case scenario is that they beat expectations, show a massive acceleration in revenue, and provide a strong forecast for 2026, driven by the RWA platform. In this case, the short seller thesis would be severely damaged, and the stock could re-rate significantly higher. The bear case scenario is that earnings are another big miss, that the revenue remains anemic, the cash burn is still out of control, and the Silex deal is framed as a long-term potential with no immediate impact. This is the definition of a speculative, binary event-driven stock. The expectation is that Datavault AI